Good morning, everybody. Welcome to the ARMR Report. Welcome to a new week. Hope you guys had a great weekend. I'm going to get philosophical with you in this morning meeting. So let's don't forget, virtual hedge fund. What does it mean? We're working on the 4 pillars of asset management that are going to make us successful. We work as best we can, understanding the macro environment we're in, not predicting what are we in right now, how do we address it. Step 2, what stocks and groups best perform in that macro environment. Step 3, we'll use algorithms, both generative AI and probability algos, to determine where we want to put capital. And then we wrap it all up in a bow of stop losses and risk management. So that's what we're talking about every day on the show, all day long on the live stream, sharing those types of ideas. I want to keep everything we do here tight to those 4 pillars as we build net worth together. You're the portfolio manager of your own assets. Take the information, make it your own, figure out how to adjust your portfolio based on your risk tolerance and your goals. Okay? So, I want to get philosophical. I'm throwing down the gauntlet. I want to see how many of you pick it up. Not going to be easy. It's an investing challenge, 30 days. Let's see what our net worth looks like at the end of 30 days if we do it. What we're going to do is avoid all financial TV. We're going to avoid financial Twitter. We're going to avoid anybody who tries to get into our head and tell us, because they're smart money, where the market's going, using fancy predictions based on past performance that we all know has nothing to do with future results. But they do it anyway. There's an entire industry built on it. Erez is in. I love you, brother. I knew you would be. There's an entire industry built on it. This challenge, I submit to you, is going to be harder for me to do than you, because I sit in this seat, right? And I've been doing this for over 30 years. And I write the captain's note, and I do live streams. And it's just like a natural default setting to go into telling you what's going to happen next in the market. Here, I'll tell you something. This is a guarantee. Ready? I have no idea what's going to happen next in the market. There is no better time for us to do this challenge, because we've literally never lived in a period like this. What's the period like this to me? What's the macro story that nobody understands? Here's the period. We went through a ridiculously self-inflicted pandemic that led to ridiculous money creation, the likes of which we've never seen in history. And now we're going through an unwind. And these talking heads are going to pretend they're smart money and tell us what's going to happen next, because this is what's happened in the past. Oh, every time the CPI does this and the 2s and the 10s do that and the yield curve gets inverted, oh, the market always ends up here. This is the gauntlet I'm throwing down. Shut it off. If you like to watch CNBC all day and it's a habit you can't break, turn it to ESPN. Just start watching ESPN. Pick another couple of letters and watch it. I don't care what. TSN. I don't care. Anything other than financial TV. Be the smart money. Stop listening to the smart money, because they're clueless. They've always been clueless. They always talk their book. You don't know what their book is. They always run out and remind you when they're right. And of course, they're wrong 8 times out of 10. There's some marketing genius, I can't remember his name, old school. He figured it out early on that the best thing to do is to make 10 predictions. You'll be wrong on 8 of them. Nobody will remember. You'll be right on 2, and you can build your entire career on it. I forget who that guy is. Maybe somebody could chat GPT that question and he'll answer it. So to me, what most of the smart money breaks down into, if we look at it from a philosophical point of view. You got your Nietzsche. Most of these guys are Nietzsche, right? The world's terrible. The world's going to end. So screw everybody else. And here's how you can try to make money, right? That's what most people tell you on TV, on FinTwit. The world's coming to an end, right? I mean, there's somebody, an insider asked me this morning, what's going on in Russia and Belarus or this, that, the other thing. How does that affect markets? Or, I forget what the exact question was. I think it might have been, China and Russia getting together, and I don't know exactly what that question is, but is that a military question? Is that, the interesting statistic that a few decades ago, the U.S. dollar made up 70% of the reserve currencies, and now it's 60%. Like 3 decades later, it's 60%. And so, the dollar reserve currency is going to collapse tomorrow. So you got, none of that matters, okay? None of it matters. But more importantly, and this is what I want to submit to you, more importantly, we can't possibly know what it's going to mean to markets. We don't know. We can't possibly know. I couldn't sit here. I'd be doing you such a disservice if I sat here and pretended that I had a clue what China and Russia were doing and how that was going to affect U.S. equity markets going forward. I mean, it's such a waste of time. Gauntlets thrown. Stop thinking about it. So what do you got? You got the Nietzsches out there, right? Most of them that you see on TV or whatever, they're all Friedrich Nietzsche, right? The world's a terrible place, and it's only going to get worse. So screw everybody else. Figure out how to make money. Okay, that's ridiculous. And then you got the Descartes guys. This is how it breaks down in my mind. The Descartes guys, right? I think, therefore, I must know something. Right? They think so hard. They think so hard. They're going to tell you because I've thought this whole thing out. So I must be right. And they try to back it up with huge amounts of statistics. I think, therefore, I must know something. We all think. It does nothing for figuring out and predicting what's going to happen next. And so I submit to you, and I say this in a nod to the French right now, because French are going through some difficult times, apparently. I mean, it seems to be a cycle the French are on. Maybe you guys can explain that to me. But I'm probably butchering this name. But what is it? Michael de Montaigne? I totally butchered it. Okay. But Michael is another philosopher during the Renaissance period. He's a French philosopher. And this is how I think we need to be. I don't want to be Nietzsche. I don't want to be Descartes. I'm going to be Michael. I just butchered the last name, so I'm not going to say it again. Okay. But it's right there in the captain's note. You can go Google it. All right. If you're not up on your, philosophy. I was a philosophy minor in college. So here I get to use it. What Michael said was you got to live in the now. Stop worrying about the past. Stop predicting the future. What are we dealing with right now? And execute. I added the execute. Okay. That's what we have to do. That's the philosopher we want to be. So, excuse me, jumping in to our portfolio, what do we do? All right. Instead of going over all the reasons why the market must, inevitably crash, what I submit to you is in the now, the market's holding above recent lows, even though we've heard all the horrific news out there and prognostications the world has to come to an end. Okay. The NASDAQ 100 is right near the highs. And so this is what I mean by being in the now. What's happening right now with price? I can't tell you exactly why it's happening, but what I can tell you is that money's flowing into big tech and ARMR power play names. The human brain wants to understand. So I can wax poetic on the reasons why I think these stocks are going up. But the problem is, the more poetic I get, the more we all turn into holders. Got to hold it. Brett just said this last week, and boy, did it sound good. That's not how we execute at the ARMR report. We read and react, and we use stops to protect. It's not as much fun. It's not going to be as entertaining. You know, I'm not going to be able to come out and say, hey, I told you that was going to happen, blah, 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 right? All I'm saying to you is that money's flowing into big cap tech and power play names. So I want to balance my portfolio, and that's what we did last week. We have treasuries, we have some VIX, we have gold and silver. These are all things that will go down if the financial crisis comes to an end and money is flowing into the market for whatever reason. Fed talks tough, but then we see in retrospect numbers come out of how much money is being pumped into the system. Let's don't debate it. What's happening right now? Money's flowing into big cap tech and ARMR power plays. I want representation in a balanced portfolio, right? So conservative portfolios, they're heavily invested in treasury bills that don't come due until July. And so it's, and I'm getting 5% yield. So it's very hard to rip those out of my hands and take the capital and go buy something and make an investment. I'm not doing that right now for conservative portfolios. But I'm on the cusp because I'm seeing what I'm seeing. Forget about if I've seen it before or what it means. I'm seeing breakouts in quality names, primarily in the AI space. And that brings me to another question real quick. I want to just ask you guys this question. You guys let me know what you think. This is one of those questions we're going to be faced with now that we're in an AI, generative AI world. I love ChatGPT. It's so much fun to do research with it. So I was looking up this particular French philosopher, and there's a description about it. And I share the description with you. Do I have to quote ChatGPT and give that AI credit? Like, is it plagiarism to take from AI, or only plagiarism to take from another person? This is a question. There's going to be a whole bunch of weird questions like this. You know, people are going to pass off a love poem to somebody they're trying to woo as if it's their own, when really it's ChatGPT. That's not right. I fall on the side of giving credit where it's due, even if it's artificial intelligence. But anyway, I digress. What's happening right now? Money's flowing into big cap tech and ARMR power plays. So I'm putting capital to work in a balanced portfolio. Anywhere between 10 to 30% of my capital is going to be put to work in these names. I'm going to keep 50% of my capital in cash until the risk monitor goes green. So the biggest difference between a balanced portfolio and a conservative one is that conservative is going to hold, I don't know, right now 100% in treasury bills. But maybe 10% into some of these game-changing growth stocks, maybe. In a balanced portfolio, 50% stays in cash. So conservative, let's just say for the sake of this conversation, because that's where it is right now, 100% treasury bills until the risk monitor goes green. And then I take some capital and put it to work. Balanced portfolio, 50% in cash until the risk monitor goes green. And that 50% then goes into the ARMR index only portfolio. The 10 indexes that I invest in, 10% each. The aggressive portfolio is just an amped up version of the balanced portfolio. So if balance is carrying 15%, ARMR power plays, aggressive might be carrying 30. Aggressive still doesn't put 50% of that cash sits in cash until the risk monitor goes green. I'm only using 50%. But when it goes green, an aggressive portfolio might buy 2x indexes. Balanced portfolio is going to do just the regular indexes. So that just gives you some goalposts of what I mean when I say conservative, balanced, aggressive. All right. So anyway, we come into to today. Looks like there's some good stories over the weekend. Obviously, it happens all the time. If there's no financial Armageddon, you get a rally up in a depressed market. You get a beat down in treasuries, gold, silver, gold mining stocks, VIX, those types of things. So Monday morning, I don't adjust the portfolio at all. It's just a rebalancing of the hysteria into the end of the day Friday, right? So I stress in this market end of day rebalancing, not in the morning. Don't take positions. If you're an investor, I want to refocus what we're doing. This is about investing. It's about taking positions. And I'll tell you something, there's no better time to do that than in the midst of a financial crisis and a bear market. If we can seed the portfolio correctly with quality growth names, that's how you build net worth over the next 3 years. So running a balanced portfolio. Those are my thoughts for today. I did share with you this chart as an example of what I'm not going to talk about anymore, right? But this is a perfect example of what I mean, okay? Here's gold and silver. I'll leave you on this note. All right. So here's a swill merchant, okay? Sharing with you how we're about to go into the biggest, gold and silver and oil bull market ever, because S&P versus the producer price index. Hey, it's a sexy chart. I hope the guy's right. I hope he's right. Okay, I own gold and silver. I hope he's right. But it's a chart like that you have to avoid at all costs because it turns you into a holder and you can't think straight. If gold and silver hit the stops, I'm out. I don't care how sexy that chart looks. It's meaningless. Hope you all have a great trading session. I'll see you on the live desk, 9:25.